Ladies and gentlemen, good day and welcome to the Shalimar Paints Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ronak Jain from Orient Capital. Thank you, and over to you, Mr. Ronak.
Hello, a very good afternoon to you. Thank you and welcome to the Q4 and FY23 earnings conference call of Shalimar Paints Limited. Today on this call we have Mr. Ashok Kumar Gupta, Managing Director, along with the senior management team. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations as of today. Actual results may differ materially. Statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. A detailed safe harbor statement is given on page of the company's investor presentation, which has been uploaded on the stock exchange and company's website as well. With this, I hand over the call to Mr. Ashok Kumar Gupta for his opening remarks. Over to you, sir.
Good morning, everyone. It's our pleasure to have a discussion with all of you regarding our results for the quarter 4 as well as the financial last year. My colleague Mohit is with me, who is the CFO of the company, and I'll request him to just give a brief on the performance to you, and then I'll take over from him. Thank you, and Mohit.
Yeah, thank you very much, sir. Good afternoon, everyone. First of all, I would like to thank everyone for your participation in Shalimar's growth journey. On last Saturday, our board has approved the quarterly as well as annual financial results of your company, wherein during the quarter and in full year we have recorded a consistent and growth, both in terms of volumes as well as value. In quarter 4, we have recorded total income of 139 crore with a growth of 7% from the previous quarter and 29% from the last quarter same year. There are some adjustments of around 6 crore rupees in the top line. Had it not been there, the revenue was recorded as 145 crore for the quarter. Cost we have recorded at 72% with a gross margin of 28%, which is an improvement of 2% from the previous quarter. EBITDA, we have recorded a negative EBITDA of 2.65 crores. We have booked a loss of 9.62 crores before taxes for the quarter, and last year quarter it was 9.3 crores last year same quarter. In this EBITDA line, there are again some adjustments because of exceptional cost and revenue recognition policy. These total adjustments are to the tune of 5 crore rupees. Had it not been there, the EBITDA would have been better off by 5 crore rupees and would have closed somewhere around 4 crore rupees EBITDA for the quarter as a positive number. In full financial year 22-23, we have recorded a turnover of 493 crore rupees. Again, there is an adjustment of around 12 crore rupees in the top line. We have closed the year with a growth of 36% in value and 15% in volume, which is higher than the industry or the faster than the industry. Gross margins for the full year is 27% and costs are 73% of the revenue. EBITDA for the year is negative 7.55 crores. If I avoid the adjustments, this would have been reduced by 5 crores and would be around 2.5 crore rupees against 25 crore last year. Loss before taxes is on a full year is 36 crores against the 61 crore last year. I think it's a significant improvement during the year. And during the quarter, as I already mentioned, the company had to book additional cost of 5 crore rupees in various line items, wherein 4 crore is in cost of goods sold and the remaining is in other taxes, which do not pertain to the current quarter and year. As these exceptional costs would not be there, gross margin would be better by 2% and EBITDA by 5 crore rupees. So with this, I am handing over to Mr. Gupta. Thank you very much.
Good afternoon, and again, thank you, Mohit, for your opening remarks. So let me tell my friends that we have followed a very aggressive strategy in this financial year 22-23. As you know, Hala Infra gave us the funding sometime in March 22, and right from the word go, the strategy was aggressive. Aggressive when I say is that let's try to gain market share, let's try to go aggressive, flow against the current, make investment, spend money, increase expenses, but end of the day, it's important that we get more sales and more market share. We worked in this year towards that strategy. We started that strategy, and going forward, we will continue that in a much more aggressive manner. So going forward, you will see expenses further going up, investments further going up, and the company will continue to attempt to garner more and more market share. You would have observed that Mohit was speaking about certain adjustments. So apart from an aggressive strategy for more sales or more market share, we also changed our auditor. So earlier we had some auditor from Calcutta, but with the new promoter coming in or a new investor coming in, as well as taking a more aggressive approach, we have taken Grant Thornton as our auditor, GT as our auditor. And as you know, as and when any auditor comes on your stage, they try to kind of do their own working, and always there will be some new provisions which will be provided, which may not be there earlier. So accordingly, the new auditor tried to put up some more provisions. We were to provide for eventualities which may or may not happen, legal cases which were there 15-20 years old, stock adjustment, the adjustment on account of last day sale. So there are many adjustments which we insisted, which we are bound to impact any year when the auditor changes. So those impacts are there, and as Mohit was saying, if those were not there, then the results would have been on paper much better. I'll give you in comparison with the industry. The industry has grown in this year by around on an average 18 to 22%, if you see the results of the top 5 players, while our growth on value basis is almost 40%. So against the industry average of around 20% value growth, we are around 40% revenue growth. Quarter-wise also, if we see, while the industry was growing hardly 10-15%, our growth is around 35%. My colleague Kuldeep, he will explain more about it. Similarly, on account of improvement in the margins, the cost of goods sold has increased for most of the players with respect to the previous year. In the financial year 22-23, many cases it has increased by 4-5%. In some cases it is the same, but we have been able to reduce our cost of goods sold by around 3%. Again, aggressive, expensive strategy, increase expense, increase capex, but improve efficiency. You will be surprised to see that most paint companies have a very constant cost of employees around 6%. Here again, while overall year basis, our employee cost as a percentage of revenue is marginally lower, in the last quarter, we again became aggressive and we increased our manpower. So you'll see a slight increase in the manpower cost in the last part of the year. So all in all, we have been taking a very aggressive strategy, aggressive for increasing the volumes. Ultimately, as you know, so many players are coming in the paint industry. So unless until we increase our market share now, tomorrow it may be too late. If we do all these adjustments, I am happy to share with you that we have worked out a kind of a statement, P&L statement, after all the statements, all the adjustments, and if we do all the adjustments, it's possible that we may be neither EBITDA positive or negative or minor negative. That means we have been able to cover a long distance, whereas last year our EBITDA loss was around 28 crores. This year is almost neutral. So which is a very big story, very big coverage. Again, if I see our industry, the improvement in EBITDA is not to this level. So I think on the whole, it was a good year for us in Shalimar. We are very happy with the things which have turned up. Investments have come up, strategy is aggressive, results are coming in, sales have increased, almost double the rate of the competitors. We can't ask for more. Thank you very much, and we are now open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Manan Poladia from MKP Securities. Please go ahead.
Hello, sir. Good afternoon. Am I audible?
Mr. Poladia, may we request you to use your handset for optimum audio?
Yeah, just give me a second. I'll switch.
No problem. Thank you.
Hi, am I audible now?
Yes.
Yes, sir. Please go ahead.
Yes. So, sir, we've spoken earlier and you'd given me some certain guidance saying 25-30% odd sales CAGR for the next 2-3 years. And congratulations on the great set of results, primarily. You've delivered on your guidance, so that's fantastic. So what I wanted to understand was from year going forward, since we've come to almost after your adjustments, flat EBITDA levels, how do we get to the point where we have a positive EBITDA? Like what changes are you making? Because I'm guessing we are spending a lot more on advertising right now, right?
So if you see our Q4,
right,
is almost positive EBITDA, even if it is 2% or so. Already we have reached it. If adjustments were not there, so we would have been almost 2% positive EBITDA. This should go up in this year significantly. You see, whole game is now of volume. We are growing last year 40%. If then this trend continues, then coming few days, coming few months is going to be all added. All the new revenue will be added to the EBITDA only.
Right,
so increase significantly.
Just one follow-up question on that. What would be our total capacity and utilization at the moment?
So today my capacity is sufficient to give me a turnover of almost 1,200 crores to 1,500 crores and 1,200 crores and my utilization on a country level is almost 50%.
Okay, sir. So, sir, my second question is related to the water solubles in the industrial coating space that you are talking about. So, what I wanted to understand was, Sirca Paints is also launching their own water solubles brand for kids furniture and that specific niche. So, I wanted to understand the competitive landscape in that space.
Who is a better person than my colleague Kuldeep to explain this nonsense?
Thanks, sir. See, Sirca is altogether in a different landscape. They operate in a different area altogether. Sirca is, I have to kind of put figures straight, 80 to 85% of wood coating industry.
Correct.
They import and sell, and now that they have launched some emulsions in the marketplace, see, essentially Sirca is known from the wood coating point of view. They don't have majority of shares in decorative space as such. Barring that, they have some of the dealers who are common dealers from them who sell decorative paints as well. So I don't see any challenge from these kind of players because they operate in a different space altogether.
Right, sir. Understood. Thank you so much.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Our next question is from the line of Praful Siddharth from Shravas Capital. Please go ahead.
Hello, sir. Am I audible?
Yes.
Yeah, congrats on great set of numbers, sir. I just have a few questions. So if you look at that sequentially, right, our other expenses has gone up from 16.4% on revenue to 21.1%. So is this entire difference attributable to the cost adjustments we made during the quarter?
Yeah, you are right. Actually, a lot of provisions have been added. I think in the other expenses, almost 4 crore worth of, this provisions are there, primarily for sales tax cases and GST cases of prior years. So all those provisions are there. If they were not there, our other expenses would have been perhaps lower by, I think, 4 crores.
Sure. And has this entirely been provided for? This is a one-off expense, right?
It's a one-off expense. Old cases, I think mostly sales tax, 13, 14, 14, 15, and it's not exactly expense. So we have filed our return of 13, 14, 14, 15, and now they have created a demand that you have to pay so much money because certain documents are not agreeing to whatever we have submitted. They say some signature are not proper, whatever. They are, 13, 14, 14, 15. What do you do? You can't fight. You can't do anything about it.
Right.
Just accept it now.
Yeah, sir. Sir, and how many dealers did we add in the month of April and May, and also how was the growth momentum in these 2 months?
A favorite subject of Kuldeep. He will speak about it. Kuldeep.
Yeah. So, as we had said in the last meeting also, that we are wanting to aggressively increase our footprints in the market, be it regional, be it in the existing markets. So if I have to put a figure to this, last year we have increased our distribution by 25%. So roughly we have added some 1,500 to 1,600 new outlets, which have contributed actually 13% to our top line. So it is augmenting well with our strategy of expansion and extraction, which we had also discussed last time. In terms of expansion, we are going to increase our footprints, and in terms of extraction, we are going to get better shop share from the existing outlets.
Yeah, sir. Sir, and what is the revenue contribution from infra market in this quarter? If I remember right, it was 5 to 6 crores the last 2 quarters.
So it has contributed 1 to 1.5% to our overall revenue.
So when you say 1 to 1.5% revenue, does this also include the sales routed through infra market, or only the sales which are made to infra market directly?
All put together.
All put together. Yeah, sir. So that's my last question. So what are the factors which are driving the growth of the industrial paint segment? Because I see significant volume growth when compared to decorative.
Okay. So if you look at, as was discussed by Mr. Gupta also, that our growth has been highest in the industry this year. We are ahead of the industry by 20%. If you look at the industry this year, 19 to 20% has been the growth, whereas our growth has been in the tune of 40%. And as far as the emulsion saliency is concerned, this has happened on account of a greater demand for emulsion saliency, which we have increased by, which has gone roughly 6 to 7 notches up in terms of we were at 50 to 60%, which has gone up to 62%. So that has helped us to build better value sales as against volume sales.
Great, sir. Thank you. And would we continue the same growth momentum going forward?
Yeah, so that's what we are continuing. Our target is to further get in line with the industry norms, which is roughly 68 to 70%, and hope so in the first quarter end only we'll be able to touch that. And for that we are having a product pipeline in place. We have got our focus, which is essentially on to water-based products and essentially on emulsions.
Great, sir. Thank you and all the best.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Weber, who is an individual investor. Please go ahead.
Hi, and thank you for taking my questions. So I have two questions. The first is taking a cue from your opening comments about spending more to grow faster. How should we look at future profitability? So if there were 100 crores of incremental revenues, in the next year, what would be the percentage that would flow into EBITDA? So that's the first question. Thanks.
So if you observe, our gross margin is in the range of 30-32%. So one thing which has to happen now is with increased volume and increased focus on emulsions, this amount has to increase to 33-34%. Now, if I talk of increasing in the expense, so the increase in expenses mostly in two ways. One is capex, and one is in HR, which is people. Already our HR expenses are 11-12%. I don't think it will go more than 11-12% in any case. I think going forward it will continue to be around 11%. So that way, percentage-wise, it will not. Our increased expenses will not go into our expense part of it. On the capex side, as you know, capex doesn't affect your EBITDA. So the entire increase in sales. EBITDA by way of gross margin minus your HR cost. So all that money is flowing in EBITDA primarily.
So we should assume in the ballpark of, if 100 crores was incremental revenue, something like 30-35 crores should flow into EBITDA.
No, it will not be more than 15-20% because I said 11% goes in HR cost itself, and some cost will go in freight. So it may be than that. Because our gross margin is 32%, some of it will in any case will flow into logistics and HR.
Right. So the next question was on the balance sheet. I'm just trying to understand. So there are two big components which have led to the cash drag, as far as your cash flows is concerned, and which has consequently affected, the net debt on the books. The first one is changes in working capital. Now, your working capital on a year-on-year basis has moved from somewhere around 2 months to more than 3 months now. Right? Bulk of this is driven by receivables. So if you could shed some light on that. Second, there is this item called cash flow from investing activities, which is almost 84 crores. What is the nature of this, cash flow? Could you explain that, please?
Okay. So if you see our inventories level, which has grown by around 20 crore rupees during the year, and our debtors have also grown by almost 30 crore rupees. So majority of the working capital which we have increased in these two line items. Apart from that, we have spent, we have increased our tinting machines wherein we have done some capex part. Apart from that, hygiene in our warehouses. So we have, spent some good amount of money there for the hygiene. So we have spent around 40-45 crore rupees during the year in terms of working capital as well as on the interest side. If we talk about the investment activities, there are some funds which we received as a warrant from the investor. There is 37.5 crores, and the remaining is FDs which have been shifted and are maturing or coming into the investment.
And you mentioned about increase in the receivables. But receivable days I see is almost same as 80 days. You think this is different? 80 days only, is it?
Yeah.
Okay. So I'm just
actually the investment has gone into, so if you notice our, considering the size of the company has increased from 350 crore to 490 crore. So your investment in working capital is there. Our receivable days has been broadly 81 days. Our inventory days, historically it was very high. It was 130, 140 days. In the FY21 it was 140, 22 it was 130. Now it has come down to 115. What we have done is we have done some correction in payables because our payables, there was huge amount of stress payment that has happened till last year. When you're comparing with FY22, March 22, there was huge stretch in payments to creditors, which we have regularized it because, we wanted to build long-term relationship with the vendors. So we have now been in line with the industry.
Okay. And so just correlated, what is this other financial assets line in your balance sheet? What is this comprised of? This must be some part of the warrant.
So these are short-term FDs and the deposits from the dealers.
Fixed deposits.
Primarily fixed deposits, yeah.
Right. So if I have to take the net debt calculation for you guys, I should
Any debt.
So I will add cash equivalent, bank balances, and other financial assets. Is that
So if you do the OCD part, which is 55 crore given to Hela,
right?
Your outside debt will be around 37-38 crore, and your fixed deposit is around 75 plus crore.
Okay. Understood. I think for, just the sake of clarity for all investors, you might want to, put this upfront because this kind of gets a little confusing, but it's clear now. Thank you so much.
Very good suggestion. We will try to do it from the next quarter.
So people will have to pass on that now that you're getting profitable. So.
That's right.
Yeah.
Right. When full financials will be uploaded, you will find all the schedules in place here.
All right. Thank you, sir. Thank you and good luck.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is on the line of Darshan Shah, who is an individual investor. Please go ahead.
Yeah. Thank you for this opportunity. Am I audible?
Yeah, Darshan, you're audible.
Yeah. So as mentioned in the previous call that Inframarket has plans to open their own stores. There are materials will be showcased and that initiated some time back, I believe. So can you please give us some updates in terms of the number of new additions?
So this is more from a branding perspective that Shalimar is trying to do for the stores and all. So currently we have around 5 to 6 stores which is being where Shalimar stores are being there. That's an overall number perspective.
So see, this is there are a few stores of Hela Infra where we are keeping Shalimar paints. But as mentioned, this is more from branding part of it. They are retail stores, and they are even Hela Infra has just started those stores, so sales will pick up in due course of time. But slowly in those towns where Hela has opened the stores and they're keeping our material, the word is spreading around. I think to that extent it is helping us.
Okay, sir. And the plan going ahead, do you plan to accelerate the number of stores?
Hela will increase the number of stores. We will only keep our material there.
Okay, sir. Okay. Yeah. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Sahil Bajoria, who is an individual investor. Please go ahead.
Yeah, thank you for the opportunity. So I have a couple of questions.
Mr. Sahil, may we request you to use your handset?
Am I audible?
It's too loud, sir, and very muffled.
Hello?
Yes, that's better, sir. You can go ahead.
Yeah, thank you for the opportunity. So I have a couple of questions. How are we dividing the current production capacity between the decorative and industrial paint segments? And what steps are being taken to optimize and maximize our capacity utilization for both decorative and industrial paints?
So I think currently it's around 32% production happens for industrial and around 70% production happens for decorative. And so we are increasing our capacity utilization in all the plants, but mostly in Nashik and Chennai, where we had some spare capacity available with us. Capacity-wise, since there is no constraint, so we do not envisage any problem. But yes, the impact is as sales will increase, capacity utilization will automatically increase.
Okay. Also, could you provide more details on our expansion plans for increasing capacity in different regions? Which specific field locations are being targeted for capacity expansion? And are there any plans to explore feasibility in the East Zone as well?
So we have 3 plants today. One in Secunderabad in UP, the second in Nashik in Maharashtra, and third near Chennai in Tamil Nadu. Now we are only taking the brownfield expansion to the extent that
in the infrastructure is not there or balancing facility is not there, and automation should happen. All this to increase our capacity significantly. We are having large plans for that. But this investment which is being made is more by way of infrastructure and automation, and not per se only for increasing the capacity, but as a resultant, the capacity will increase significantly. We do not have an immediate plan for East Zone, not even next 3-4 months, because we are looking at more capacity utilization at the current plants, and after the utilization is better, perhaps we'll look at it. So maybe in due course of time, in a couple of months, we will look at East Zone.
Okay, yeah, thank you.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Manan Poladia from MKP Securities. Please go ahead.
Hello, sir. Am I audible?
Yes.
Yeah. So, sir, my question is based on, I have 2 questions. The first question is, you spoke about CAPEX, sir, but I can't see any changes in your gross block or in your cash flow statement. So I just wanted to understand, when you say CAPEX, has it been passed through the P&L?
No. So we have not yet taken the CAPEX. We have only planned for it. We have done small CAPEX. I will not say we have not done any CAPEX, but it may be of the order of 5 to 10 crores only at this moment.
Okay.
But things have started. For example, the first thing which we are doing and which we think is the most important is R&D center. We planned expenditure around 8 to 10 crores there. The construction has started. The actual investment which might be there might be only 1 or 2 crores, and I am sure Mohit would have put in capital work in progress, whatever 1 or 2 crores might have gone. So you will not see it gross block increasing, but you will see gross block increasing this year, not last year.
So to summarize, we have invested around 11 crore till now, and the results we have shown in the cash flow statement on the last page.
So these 11 crores are primarily tinting machines to the tune of around 5 crore rupees, and the remaining is, civil.
Okay, sir. Understood. So that's the first question. And secondly, we've received about 75 crores from the warrants, correct? Like that we still have?
Pardon me?
Sorry? Because only 25% of 75 crore has been received. So 150 crore of warrant was issued. Around 35 crore is received. 37 crore was received, and 120. 112.5. That amount is yet to be received, which will receive in this year.
Okay, so sir, my question was on the utilization of these funds. Like once this entire 150 crore block is received, what do we intend to do with them outside of the CAPEX that we're already doing and outside of the distribution expansion?
Primarily marketing, and maybe we'll see when it comes. We haven't formulated our plans for the expansion or utilization of these assets as yet. We are seeing when the funds come, and so those plans will be formulated by the time the funds come.
Right. So my only question is, if you could give me a broad percentage number also on how much you intend to use for expansion, how much you intend to use for advertising, whatever is earmarked. Like just a broad percentage number would also do. I don't need an absolute fixed number as of right now.
So you see, in total capex, in the 3 places we are taking up, we will be investing around 100.
Total 190 crore and 40 crore would be through our own funds. Remaining we will get.
So 190 crore is the likely expense in the all investments, maybe slightly less. So looking at conserving cash there. And another, we are planning to spend around 30 crores in marketing this year. Okay. And maybe next year, maybe more than 30 crores, 40, 50 crores. That's how we are trying. As I said, increase your spend so that you can increase your sales.
Understood, sir. Fantastic. Thank you.
Thank you. Our next question is from the line of Amit Mamgen from Asian Market Security. Please go ahead.
Hi, congratulations on great set of numbers.
Mr. Amit, may we request you to use your handset while asking your question?
Yeah, am I audible now properly?
You're audible. Please go on.
Yeah. So I have few questions. So one is, just again a clarity. So did I hear that? So our like-to-like basis in terms of revenue for Q4 was 145 crore. As investor, we should consider as 145 crore. That should be the base for future growth?
Yeah, around 140 crore, you're right.
145 crores, right?
140.
140. Okay, perfect. So my second question is, so we've taken this employee stock option program very recently. I think this was last month or before last. Can you just elaborate on the same? I think that's about 19 lakh shares across. So if you could just...
We have given the ESOP to all our employees based on the grade and number of years of experience that they have. And, we've got very good response for them from all the employees. We've already connected with all of them. Now they have a window of, next 6 to 12 months to whom they need to, exercise it. So still the time is there. Once the time is there, we'll be allotting the ESOPs to them.
Fantastic. That's a very, very good initiative by the company. Thank you so much. If I have any other questions, I'll come back in the queue.
Sure. Thanks a lot. Nice talking to you.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Mr. Darshan Shah, who is an individual investor. Please go ahead.
Yeah. Hello, sir. Question. So, could you paint some picture about our freight cost situation?
Our freight cost continues to be in the range of 7 to 8%. I think for last 3-4 years, that's the same as that is true. There has been increase in the diesel prices and all those things have happened. And also, we have opened more depots. Because of which there was supposed to be minor increase, but because of increased volume, there has not been any increase in percentage. So freight cost continues to be 7-8%. So far as I think competitors concerned, their freight cost is 6%.
So can we expect this number to come down to say 5 to 6%, or it will remain stable for some time?
This year also as a strategy, we're planning to open around 10 to 15 depots more. So as we said, we're going a little aggressive in terms of our distribution expansion. So this year we do see reduction in freight cost, but it will not be like 1% per 100 basis points. It could be in 0.25 to 0.5.
Yes, sir. And if I could recall correctly, about last quarter, you had set a growth rate of about 20 to 30% year on year.
No. So last quarter, we have a growth rate on a comparative basis of 36%.
Okay, sir. So, do you have you set any potential growth targets for the future?
We continue to be in the similar line. We continue to maintain 35%, right, Kuldeep?
Yes.
Yes, sir. So could you just shine some light on the factors that, you believe will help you maintain these high growth factors?
So, as you know, we are in two areas, industrial and decorative. When you say industrial, you basically refer to protective coatings. We are not in automobile, we are not in coil coating, we are not in significantly marine coating. If we are present, our presence is in protective coating. Now, what do you mean by protective coating? Protective coating primarily refers to coating on steel. Here you have steel structures, which is like PEBs or any steel structure, factory structure, or you have pipelines, flat pipelines. Protective coating has been our forte of Shalimar Paints for long. We have not been focusing on it for some time. Now the focus has changed. We are again back on protective coating and on the pipelines and on the steel coating. I must share with you that perhaps in this year, our growth in this segment of protective coating has been the highest in the whole industry. And this growth has come not only in terms of value, but also in terms of number of products which are being supplied. Over a period of time, maybe next 2 or 3 years, maybe even shorter than that, depends on our R&D, we will be having the largest basket of products to offer in the protective coating segment. Our idea is nobody should have the range that we will have. Nobody should have the quality. Our quality should be second to none. Our range should be second to none. Hopefully, our quality and range being that, our volumes and our value will be second to none. That's our idea. So this is one area where the growth is expected to come. We are currently selling around 200 crores worth of protective coating every year. The market is very big. Market, I think, is more than 4,000 crores. We've got a big way to go. We can increase this 200 crores to 400, 500, 600, even 1,000 crores in due course of time. Secondly, so growth will primarily come from industrial, which is protective coating. Secondly, we are focusing on decorative. Our colleague Kuldeep has done a lot of work in decorative coating. He's going to give you a brief glimpse of what exactly he is planning in decorative, particularly emulsions, particularly with painters, so that volumes can come from there. Kuldeep, can you add on, please?
Yeah. Thanks, sir. So, as we discussed last time also, our growth story is all about expansion and extraction. So, and in line with that, what we have also understood that painter and dealer plays a very big role when it comes to the selling of decorative verticals products, wherein they have a better say. They act as brand advocates. So we have taken that route to kind of accelerate our growth now and in future also. So a lot has been done around painters. We have almost doubled the number of painters working with Shalimar. We have also doubled the number of painters, active painters, who are buying you every now and then, and which is a clear indication of the saliency or the equity of brand Shalimar going up in the marketplace. Apart from that, we have also introduced some products in emulsion category, which have also given us some inroads in the marketplace. Also, we have 8 to 10 new products lined up for future, which will further strengthen our product portfolio and our grip in the marketplace. So, construction chemical space, we were not present. We have launched one particular product which has taken off very well in the dampness space, which has already been a 2,500 crore category now. And so, as the size of the industry, because we all developed in the last 5-6 years time only, and we have launched one product into that particular by the name of Zero Damp, which is doing very well. We have also ventured into the primers by launching a variant of primers. As I mentioned, we have got 78 more products to launch, and that's all about decorative. And the focus on painter and the dealer expansion will continue with a lot of spend happening around visibility in the marketplace and onboarding of new customers and new painters. We'll go on to the digital platform very aggressively just to establish that connect with the consumers. So that's how it's happening in decorative. And as kind of said by Mr. Gusta, we are taking a leadership position. We are wanting to take leadership position, 1 or 2 verticals as far as industry is concerned, by establishing our complete product portfolio, basket of products. And since we are very strong in pipeline segment, we are aiming to be number 1 in this particular segment in due course of time.
Thank you.
Thank you for such a detailed answer, sir. All the best for your future.
Thank you very much.
Thank you. Our next question is from the line of Ahmad Mamgen from Asian Market Securities. Please go ahead.
Well, thanks for the opportunity again. I think I had a question which was now well elaborated by Mr. Kuldeep. My last question is, sir, could you just let us know the timelines for the warrant conversion both by HELA and the promoters?
August end. So I think it was 18 months. 18 months should be over in September.
This coming September, right?
Yeah.
And sir, even the OCD, I mean, so OCD is optional, but okay, perfect. I got your point. So this September is the warrant conversion, right?
Yeah.
Thank you so much, sir. Thank you so much. All the best.
Thank you. That was the last question of our question and answer session. I would now like to hand the conference over to Mr. Ashok Kumar Gupta for closing comments. Over to you, sir.
Hi, thank you, members. It's really good of you to take so much interest in our company. I must tell you that it was a good year for us. We really grown significantly, and in all areas of operations, there have been that was a big stream. And there has been a lot of cleaning up done in the organization, in the plants, in the accounts, these things should give us results in days to come. Thank you so much for your participation.
Thank you. On behalf of Shalimar Paints Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your